Interest rates. Why are so many borrowers focused on interest rates at the moment? The Reserve Bank has lifted the interest rates quite a few times. The fixed rates are expiring and then you're going back to variable. There's cost of living pressures that are making all of us spend more. Don't mention petrol, but there's a lot of reasons why you should be focusing on your interest rate. What's happening with interest rates? We've just come off an ultra low rate environment. Most people learn to budget on the lower interest rates, and now we've got to learn how to budget with the higher interest rates. Fixed rates have increased, we've got inflation pressure, and there's many factors outside of Australia that are changing interest rates currently. Is it a good time to fix? No, not every person should be fixing. We're fixing for a certain reason, to have certainty. If you go to sleep at night worried that repayments are going to get too expensive, it's a good time for you to fix. We're not fixing to beat the banks. We did beat the banks during COVID, and some people locked in at those amazing 2 and 3%. That's unbelievable. It's not what we're going to do again. We're fixing for certainty and comfort. What's happening with interest rates at the moment? We've just come off an ultra low interest rate environment. For once, we've beaten the banks, which is amazing. Inflation is out of control and it's going to be hard to rein that in. The Reserve Bank has lifted rates multiple times. On top of that, the world economy is uncertain. We're not sure where Trumponomics are going to end up. So is it a good time to fix? Absolutely, for some people. It's not the right decision for everybody. Fixing is not about paying less interest over the fixed period. It's about certainty. If you go to sleep at night and you are worried about interest rates and repayments, it's a good time for you to fix. If you're not so worried, then maybe it's not the best idea for you. Fixing a rate gives you certainty and you know exactly what your repayments are. That's the benefit. What does this mean for homeowners and buyers? It means that your borrowing capacity is going to be less than it was a few years ago. It means that there's a lot of already owners in existing mortgages that need to be reviewing their finances. It means you need to be prepared for higher interest rates and further costs onto your mortgage. And it means that when you're getting ready, you need to look at your budgeting, your preparation, everything when you're looking to get a mortgage. What does this mean for purchasers and homeowners? It means that your borrowing capacity is not going to be the same as it was a few years ago. It means you need to prepare for these future increases and have the budget to be comfortable. It means that a lot of existing borrowers are reviewing their finances to make sure it's affordable. And it means that it's not just about a home loan, it's about everything else. Budgeting, structure, cash flow, and having a safety net. Should people still be considering buying or refinancing? Absolutely. The market does not stop, but you just need to take action. You need to make sure you've got a budget. If you've got an existing mortgage, make sure it's at the best interest rate that you've got. Make sure you're making wise decisions, not decisions from the heart, but decisions from the brain. And most of all, prepare. Talk to us. What does this mean for borrowers right now? It means you need to take more time to look at your options and prepare. With your existing loans, you need to make sure that it's in the right position and that you can afford everything. You need to consider consolidating debt and making sure it's as streamlined as possible. And most of all, get out there and look for opportunities. There's still plenty available. Thank you for watching today. And as always, we'd love to help you out. Give us a call and we can look at your financial situation. Talk to you later.